Thanks again, guys, for coming up and attending this nice session on Decrypt. So today we'll be talking a bit about crypto, Web3, and games, and how Web3 games are actually changing the landscape for the crypto in general, right? The entire Web3 industry, and we're going to go a little more deeper into it. I'm going to wear a more economics hat and talk about it, and whatever I have learned in last couple of years is what we're going to talk about, the trend that we see and the potential that we see in future of blockchain gaming in general, right? So before we get started, a little bit about myself. So I'm Siddharth Menon. I've been an entrepreneur since almost 17 years. In fact, basically all my career. And I've done a couple of startups. One of the startup is called WazirX. So WazirX is India's biggest exchange. So it does a fiat on-ramp and off-ramp for people. So for example, if you want to convert from INR to crypto or crypto to INR, this is the exchange that you would be able to on-ramp and off-ramp with the highest liquidity on board. And while building this in 2018, obviously, 2018 was a very different landscape for crypto. You had a banking ban coming from RBI. Many, very, very bad news. In fact, it was the worst time for crypto be in India. But we sort of fought over that, and we were building and innovating things for crypto in India. And luckily, you could see all the progress that has happened in last 4 to 5 years, where there's a lot more adoption in terms of crypto, not just at the consumer level, but also at the developer and the startup level. You see a lot more entrepreneurs who are now thinking about Web3 as a strategy, right? So in 2018, I was also very interested in games. I believe that games are the next big thing because a couple of things, right? Like for example, when you talk about selling Bitcoin, you have to tell people what is Bitcoin, right? You have to talk about what's money, how does money work, and then to understand the concept of Bitcoin. For Ethereum, you have to explain them what's the concept of cloud computing. But when it comes to digital asset, people just get it. It's much more easier. And the reason being is the whole digital in-app purchases or digital assets purchase has been happening even before crypto existed or even before the whole Web3 existed, right? These are like old behavior thing that is happening in the gaming world for years, and then Web3 comes on board, right? So people understand, buying digital land, digital assets, digital gun, everything is something that they are already aware of, and it makes it much more easier for Web3 to come on top of it. So when I was talking to people who understood this, they said, "Hey, I'm ready. I understand this, right? I understand digital assets." So we realized that this is going to be a big potential for the industry. So in 2018, I started investing into games. I started, mentoring games, blockchain games, and probably late 2018 is when I started looking. I'm losing all my money, right? I've lost my money. So and like everybody else, even I was very excited about, hey, crypto is everything, very bullish about it. Put your money, and when you lose money is when you start getting serious about it and start doing your research on it. And I was one of them. Then I started researching about it, right? Like, why did I lose my money? What's the fundamental behind it? Fundamentally, it looks very strong, but still, there are like, what are the things that is actually, the leaking bucket of the entire industry? And to my, discovery, I realized that the basic economics that we are following in the games today are very old traditional Web2 economies that is in close source, just a closed economy, right? So it really doesn't make sense here. And I understood that better because I was building WazirX, and at WazirX we were building solving a similar problem of market liquidity, capital coming in, all those things. You're playing always around money, so trying to understand how this works, and then trying to see, hey, how games work, and say, hey, this is a big missing piece. And that's how the journey started. Luckily, I was part of a couple of games, being advisory, and then were able to develop better economic models around that, and see through the potential of what the industry holds. So today we're going to talk a bit more about it. Also in 2018, right, or 19, whenever I used to go to any game studios and try to pitch them saying, hey, you should build for blockchain or crypto, they used to literally hang up on me. That's it, right? Like, because they think crypto is Ponzi, it doesn't make sense, people will not like it. But luckily now, thanks to Axie Infinity and many other plethora of investments that is happening around Web3 gaming, now everybody is interested. All the studios now are thinking about what's our Web3 strategies. And comparing that world to this world, we are at a much better place today, and a lot more people are now interested in this space. So good place to be. And today we are talking about economics. Hopefully, people take this seriously now, so that we have a better sustainable economy, right? So what I'll do is I'll just take you guys through a set of slides just to give you a very high level understanding of what the economies lies around this. And this is what is the missing piece, and what's a very important piece when we are talking about crypto and game. And if you are able to solve this really well, if you have a very good game and if you are able to get a very good economy, this is the killer recipe to sort of have a very good success. So let's just dive into it. Let me take you through a couple of my slides. Good. So let's talk about past and future of Web3 games, right? How it has evolved, where we were in Web2 and how it is evolving into Web3. What are the different kind of people who are playing these things? Who are the new actors in it? How the economics works? Why are we all talking about it, right? To start with, let's go to the very basics, right? Game assets are becoming the next big investable class. When you think about it, it's a very important, understanding to have to realize that what's happening around it. Yeah. So for example, when I go to sell Bitcoin and tell people, hey, you should buy Bitcoin, or what is Bitcoin, you have to talk about again complexity of how money works. People don't understand whether Bitcoin is a currency or a commodity or where it stands. Again, Ethereum, then you again have to talk about cloud computing, how it works, how does it even make sense, right? People who are probably using AWS understand the power of cloud computing, but not general public, right? Not everybody. Then finally, obviously, when we talk about DeFi tokens, again, very complex. For that, you need to have understanding about finance in general. But when you talk to people who've been buying, Candy Crush in-app items, or buying so many items within the games, they all understand what this means, right? Digital assets. They've been buying lands, they've been buying tools, they've been buying, some of the upgrades within the games, and this is happening since decades. It's not something that is happening now. So, for example, Candy Crush itself did about more than 200 plus in-app purchases. This was an old data of 2018-19, but I'm pretty sure it has gone up in recent years. And also in 2021 itself, the entire gaming industry had a revenue of about $250 billion. That's a lot of money. And this is all happening around in-app purchases, downloads of games and many things around it. So if you think about it, this is an already matured economy. When we talk about a 2.5 or $250 billion revenue, we are talking about a market cap of already $1 trillion business, right? And crypto is still lingering between $1 trillion business, right? Like if you see, it goes about, it has gone to max $2 trillion and then came back down below 1 trillion. So if you see, this is already a mature market, and Web3 coming on top of it has a great potential in terms of how where it can go. So let's break it down. Let's try to understand what's happening, what is happening before and today. For example, today, if these games already had coins and marketplaces in the Web2 space. So how does Web3 makes any big difference? What does it bring to the table? People were able to buy tokens, and the concept of tokens already existed in games, right? So, well, a few things, right, to think about it. One is tokenization of assets, right? What is happening is, till now the asset exists only in one realm of that particular game, but today it can be tokenized. There's a token form of my asset that I'm buying, which I can also transfer around, either to keep it with myself, or to lend, or do many things just outside the game itself, right? That by itself is very powerful, because it's like creating an open economy, right? So it's a beginning of an creation of an open economy. Then we have transparency into supply, right? Today, when you buy anything within the game, right, the economy demand and supply is between you and the developer who has built it, right? So if you're buying too much of one asset, if the price is going up for that asset, it's because is the developer who's increasing the price, not because everybody is buying. So it's not a network demand. It's actually a very one-to-one economy. So there, the game developers, I don't want to use the word cheat, but they usually use these kind of manipulative economy changes, gamifying it such that some things become cheaper, some things become expensive, but it's not unified for all the users. So this transparency into supply opens up another level where everybody knows how much of the supply of any asset exists, and based on that, demand and supply can be actually inferred. Then and of course, blockchain, right? Blockchain is one protocol in which everything is shared. Today all these data exist in one game's database, are not accessible to the other game, or when you want to see this data, you cannot access to these database, and everything is like just distributed and private. But because of blockchain, a lot of these things are more public, so that gives another trust, because you cannot just manipulate things on the fly. It's everything is there on the blockchain and people can see through it, and that's the most important part, which constitutes the Web3 part of it. And of course some fancy words and terms, GameFi and many other things that just come along with it. But I think overall what you see is a construct of an open economy, which actually invites a lot of trust and capital in general. So that changes the game in general. So Web2 games, I call it the supermarket model. In supermarket model is something like, when you want to buy something, you're buying from the shop, right? You're always buying from the shop. So you're in a game, you're actually buying from the developer. So developer would price it at $1, $2, $3. You would probably price it, and developer will also see, hey, you know what, somebody's buying for $1, somebody's buying for $10. So he'll try to create more variations of things, right? When you're buying these assets. Now, what happens is, it's something like iPhone, right? When you buy an iPhone, the Apple doesn't care what's the price of it is after you buy it, right? They don't worry about the secondary market, because it's the primary market that their sales happen. So the supermarket is more like a primary market. Once you have the sale, the game developer doesn't care about what's the value of it in the secondary market, or if you go and try to resell this, because this is, once the sale is done, is done. But it's a very different market, because this is here where the shopkeeper or the market is actually governed by the game itself, right? Now, when we talk about an open economy, in an open economy, everybody can buy from each other, right? And everybody can be a producer as well, right? So it's not the shop which is producing, but even I can produce the same asset. And if I produce the same asset, I can also go and sell, right? So everybody has a similar power. And this becomes a marketplace, right? Where I also become a producer, you also become a producer, and whoever does it, and there's a demand for that asset, everybody can sell, right? So it's not governed by a shop or a game studio, but now it is sort of an open market, free market, where people decide the price and demand for it. Like, just like if you look at Bitcoin and Ethereum, nobody is deciding the price of it, right? It's just the demand and supply created by the people who believe in it and buy and sell accordingly, right? So that's how they work. So this changes a lot of things in general, because it's a fundamental change within games. Games have been very close loop, where the economists with game economists used to, they will always gamify it such that they can churn more revenue churn more sale out of a user. But here it is completely value creation based. What I'm producing, does it have enough value? Only then people will produce. So there's this need for more value for every asset, not just at the primary market, but also at the secondary market. So it's more long term, and I think it creates better value in general for the game as well. So give a very high level comparison between Web 2 and Web 3, right? So one is, Web 2 part is designed for place, no value for investors or traders who are crucial for an economy, right? So that economy is a very closed economy, like I said. So it's only sale is only done for the primary users, but not about the secondary users at all, right? So the secondary market doesn't exist. So it's not a good buy for an investor who's probably buying it for long term or anything. It doesn't attract those kind of people. So it's always a depreciating asset. So that's the second part of it, right? The value for the investor. Then in Web3, we have more value. It's very much like a real economy, right? So there is producer, consumer, and traders and investors who all play a role. and which is very important to construct in the economic cycle. So when you look at any economy cycles, you have these kind of people who are always there, and the rich and the poor, everybody sort of, the transactions keep rolling and increasing the entire market cap, right? So this is how the Web3 open market works. Then in the Web2 part, it's more driven by collectibles and rarity, right? So not everybody every player doesn't buy the assets. If you know, in Web2 world, only 1 to 2% of the actual users end up doing in-app purchase. So that's a very small number. In a very good game, it might even go to 5%, right? But that's it, right? Most of them actually never are not even part of the economy. They're just playing the game and just getting out. To attract the 5%, it's always driven by rarity, collectibles and all those sort of things, to sort of, get people to do that 5% of the purchase. Wherein in the Web3 space, the assets hold intrinsic value, right? So it has a utility value within the app, within the ecosystem. How this works, how this asset has an impact within the ecosystem, and how it within the game as a utility, or things around that. So which creates more value for the assets, as a demand is not just by vanity but also by utility. Then comes the most here in the Web2 space, mostly only the developers who are selling the assets make money, right? But here, in this case, everybody is part of the economy, so everybody gets an economic upside in general in Web3. And also the supply of the asset in the Web3 space is controlled by math, right? So here in the Web2 space, the economists will look into the how much revenue we need to increase, and based on that he will change certain part of the economy. But in the Web3 space, you cannot do it, because everything is transparent and everything is run by math. So you cannot go and change, say Bitcoin or Ethereum's emitting frequency, that is how much supply should come per day. So these things are already baked in, and it just network automatically adjusts to that and grows. So that is how that works. So in this space, there are two very important metrics to understand, right? So far in the gaming space, we had only players as a metrics, but in this space now you have another two very important metrics. So let's talk about it. So one is the play part. Everybody needs more play. That's the core activity. Number of plays and number of users who play, right? These are two important numbers that has always been there. And I think over decades, games have been perfecting that over and over years, right? So to get more players, addiction and gameplay, better games, what games work, what games don't work, many types of game, genres of games. There's a round-based game, there's building games, things around that. But there's another very important metric that is now coming in, right? This is the network capital growth. In a very high level, it is like an equivalent of GDP of an economy. So basically, all the economic activities that happens, right? So it's not just the sale of the event, but also mining of it. So mining of an asset, that is creation of the asset, is by playing the game, or secondary sale, or if there is any service that happens within the economy. Many things, every economy activities, when you add them up, is how you build the GDP. So in real life, in a country's GDP, when you calculate it, it's a composite of production, sale, services, everything comes together to show that this is how the country is performing, right? So in general, we need to think about this also as a metrics, which a lot of games don't think about when they come to Web3, because they still think that just by getting a lot more players will get them a lot more capital in general, right? That is an assumption, but that in reality doesn't work. So we have to think about this metrics in general to think about how this grow. So in this case, trading services, buy, investment, everything sort of comes together. So let's just break this down. And who are these three drivers? It's a primary driver. There are obviously a couple of more drivers, but let's talk about this, right? In a very nutshell, we are talking about gamers, right? First of all, gamers who are actually the asset producers, people who are at the bottom of the economy, who are actually playing the game, right? Who are actually doing stuff and making having fun, and getting more people together, all those things, and it increases the difficulty of the game as in when more and more people come together. So that's the gaming side of things. Then comes the speculators, right? In general, right? And it's not something that is pertaining to games. In reality also, when we talk about even crude oil, we are all consumers of petrol and everything else, right? All the fuel, diesel, petrol. But there's also another market where traders and investors are also, doing billions of trades or investment into these assets, into these commodities. And the prices fluctuate based on, market conditions, some of the news and speculation, many things around it. So even there, if you see, there is a core economic, at the bottom you have the economy of consumption of fuel, and on top of that, then there's also trading which is happening in billions of dollars, where they're not actually consuming the fuel, but they're just trading them. So the point I'm trying to make is, speculators and investors exist even in real life, even in the commodity market, and they exist everywhere else. In the Web3 space, this is where these two people come, right? These are two new people who have never been there in the Web3 space, or sorry, in the gaming space. Now they're coming here, and that actually changes the game itself, right? In many ways, because now it's very economy driven. So it was always tuned for gamers. Now you have traders and investors. So what does traders know? They need more transparency into, short term demand and supply. How does this work? How is the trend happening? Are people playing a certain part of the game and trying to mine a certain assets more? So if so, then there is a lot of they can see a lot more demand coming for certain asset, and they can trade that asset. So this is how traders are doing it. Even in real life, they do this, right? So if they know that there's a batteries are going to be the next big thing, so any raw material that creates batteries is in high demand, and that's how the prices also goes up. Again, investors also. So is the difference between traders and investors? Traders are very short term based. They trade, they buy and sell, probably in weeks, days, or months, or years maybe. And investors are very much long term. So they're the guys who actually look into the thesis, how it will grow over years, and they put money into it, right? So even in game assets, we are seeing a lot more investors also coming on board, who are buying these things for long term. So now when you're building a game, now it's not just about a gameplay. You have to also think about these guys. To understand these guys, you have to also think about economics, right? So this is how the vicious circle is being formed in the Web3 gaming space. So let's talk about, just to break it, and this is very high level, which we can cover today, right? So we have the investors and traders, and what do they need, right? So first is high volume trade. Why high volume trade? Only then they can also do large volumes of trade. Otherwise, if they're just trading with $100, they won't make too much money. But they should be able to trade more, which means there should be demand and supply both sides. It takes time. Over time, we should be able to build that. Liquidity to buy and sell these assets again, right? If I buy, say, $100 worth of something, I should be able to sell the $100 worth of those assets. If I'm not able to sell it, it becomes much more difficult for me to sell, which means I will now not put more than $100 next time, right? So if I'm not able to sell, so today if I'm able to buy Bitcoin worth even 10 lakhs or 20 lakhs, I know I can sell it immediately again, because there is so much liquidity to sell 20 lakhs. It doesn't, so that's the buy and side demand that you see. So liquidity is very important. That increases the overall, what do I say, market cap of the product. Then the velocity, right? So the velocity is very important. Velocity is the how fast does the money circulates. How fast is your circulation of the economy activities. This is actually the number of transaction in some way, if you think about, and number of economic transaction. It need not be just number of trading, but the entire economic transactions. So how frequent it is and how you can increase that number. So these are few things that that actually attracts these kind of people, that gives them a real data to sort of work with, to even decide on how much money they want to put into games. So we at Tegro, we are actually have been working on a economic template called as Tegronomics, and these are some theses behind it, right? When we look at how do we build an economy, an open economy, and what's the construct of an economy, right? So sort of taking inspiration from Maslow's hierarchy of needs, which is like a fundamental structure for a lot of things, right? Which is being applied in economics. even how hierarchy of social statuses and many other things. So driving from that, when we look into it, what does it say, right? So one is the need-based economy, which is the very basic, like food, water, which rich and poor, everybody needs it. That's a need-based economy. Then comes that's everybody needs it, right? Everybody needs water, everybody needs food, as simple as that. So that's the most bottom layer. That's a need economy. Then comes the want economy. Want economy is like, hey, good to have certain things. Like for example, a house or maybe a car. Car gives me an extra utility. House gives me extra comfort. So these are the next part of it, right? So it's a want-based economy where if you have a car, you have an extra utility on it. So that's the other economic layer, and they are still less in number, right, compared to water and food. Then comes the achievement-based economy. Achievement-based economy is much more progressive, and this is much more the higher side. It's like, hey, I don't want just a house. I want a mansion. I want a villa. I want something bungalow, right? So these are like achievements. So it's not just normal utility, but it's a vanity utility that we talk about. I don't need, just a car, but I want a Lamborghini, right? This is the other side of it. So it's more than a utility where you pay extra, where you want that, and it's more of an status, achievement, and many things around it, which basically drives and human psychology to sort of to achieve that. So these are three very important, in a very very high level, three very structured economies that exist in real life and anywhere, right? Wherever you see any economy, you'll see these structures coming in. So when we apply this to games, right, how does it looks like? So one is obviously the game, the bottom layer is where we are talking about the high utility assets without which you cannot even play the game, right? So these are very important assets that exist at the bottom layer, which you need to sort of build the game. Then example like food, water, medkit, depending upon game to game, every game is very different. Then comes the ownership economy. Ownership economy is more like where you can own a farm. You can play the game, but if you own the farm, you can do probably more, right? So it gives you extra utility, extra certain things within the game, certain guns, certain farms, and things around that, right? So depending upon game, you have this ownership economy. Then comes the collectibles. Collectible is like, again, vanity, rarity, right? You don't just own something. Your gun is not a normal gun, but it's a very shiny looking gun, or maybe has some extra stuff around it. So these are collectible side of things. So on the side, from an economic point of view, you see the bottom layer is the most fungible layer, and the top part is the non-fungible layer. So most of the NFT actually exists in the collectible wares, right? Because if everybody has it, then it's not NFT anymore, right? It's just everybody has it. But this is the most collectible layer where you have less of fungibility, right? So that's why it's rare. That's why there's a demand for it. But the ownership layer and the food and water layer, these are like the want and the need, which is much more fungible, right? So in a spectrum, you need see the most fungible at the bottom and the highest as a non-fungible at the bottom on top. But when it comes to also liquidity, when you think about market liquidity, it's easy to buy and sell water, because if you buy $5 worth of water, you can actually sell $5 worth of water back to somebody else because there'll be demand. But as you go up, it becomes difficult to get liquidity. So if you buy a big bungalow, it's not easy to sell that big bungalow again, right? Even at the same price. So it takes time. Those are because it's unique. So it takes time. You need to get the right buyer. So if you see in apartments, buy and sell faster versus a bungalow, buy and sell faster, right? So that's the non-fungibility. Sorry, that's the liquid layer that we are talking about. So even in terms of frequency, high frequency is at the bottom, that is a low frequency on top. This is important because for you to understand the construct of an economy, how does it work? So if you the top part, the collectibles here is where most of the Web2 games exist. So when I talk about Web2 games, like I said, right, only the 5% of the users were actually buy in-app purchases. So you have to make something more fancy and do it. And that is how the entire economy has been designed into the Web2 space. But in Web3, we are talking about an open economy. So when we are talking about open economy, you need the rest of the two layers as well, right? And this is where most of the games are actually missing. They are not building for these two things because they're coming from a Web2 space and trying to just make it open, which will not work unless you have the rest of the two pyramids. And also at Tegro, we are sort of building for this and helping games build for this, right? So to give them an insight into how this works, and and build a more sustainable economy where you have both sides, the most fungible and the most non-fungible layer coming together in some sense. So, being in this industry, right, you get to see how everything evolves. Luckily, I was part of a few of the games, and we were solving things step by step. And one of the few things that I realized, and I sort of put that here, is that generations of these economies, right? Most of the games will start with generation zero, that is NFT only, which is very Web2 based, where everything is non-fungible. And then they realize that today, if you look at Axie Infinity, it's very difficult to buy and sell your assets because it's very non-liquid market. Yeah, there's thousands of axes, but if you put an higher order, it goes somewhere far in like page 5 or page 10, where no even the buyers don't go to that page to buy anything, right? So it becomes much more difficult for even to have a buy and sell. A typical example would be like, if you have to buy 20 Royal Enfield bullets, and you go to a showroom, give them one order, say I need 20 red color bullets. You just do one order and you get that in maybe a month or two, right? It's just as easy as that. Or if they have it stock, you get it immediately because they are fungible. But if you were to do that on OLX and get those 20 bikes red color, it'll take you a lot more time because you have to find a seller, bargain with him. Everybody will have their own prices. The entire process takes more time there. So if you see, the buy and sell is not much more. It's not very easy when it comes to those non-fungible part, because now every bike is different. One might have an accident, one may not have, an some extra accessories. So everything is different. So it just makes it much more non-fungible in nature, and it increases the trading friction in general. Then comes the generation one, where we have the combination of fungibility and non-fungibility. I think if you have seen that structure there where we spoke about, that's where how non-fungibility and fungibility layers comes together. How the balance of that. And generation two is more of predictable supply, how the supply of these assets should be more predictable in nature. When I say that, it's very important to know, because if as an investor, if I don't know how much of the supply will have be there in 10 years, then or maybe in 5 years or 3 years, then I don't know a lot of insight into the asset itself. So in SLP, in Axie Infinity, you had unlimited supply. So you had a lot of users who come in and play. Suddenly there's a lot of supply, and suddenly if the users drop, the supply drops. So there's so much supply in the market in general. So with that erratic supply, it's very bad for an investor. Suppose if I put my money, suddenly if there is too much supply, the demand goes down and I lose my money. Right. So these are predictable supply that should be part of it. And this is somewhere, game assets are now thinking about it. And we are also helping them think about it, how to bring that in. The generation three is more service economy. Service economy is very, very much like, in real life, not everybody has to be an entrepreneur. Not everybody has to own an factory to produce things. People can hire others, or people do work for others at wages, right? And I think that's a very important economy. You have three very important economy in the world: producer, consumer, and the service economy. And service economy plays a very important role, where not everybody will take a risk to put investment into something and then wait for a few months to get the return. But there are few people who will do that, but they can also pay people to get these things done. So it's a real economy that will also here happen here. In games, you need to have assets to play the game, but if you don't own an asset, it's okay, you can play for somebody else and get paid for it, right? So the get paid to play is a very important aspect, which is the service economy part. And then comes the governance in general, like how the governance of a token or an asset looks like, how much should be the inflation, deflation, things around that. It's a little more advanced. I think that's something that will come eventually for a lot more games. So yeah, I think from all this, what you have to understand is virtual economy is the game, right? If everybody understands how this economy works, you will see traders, investors, and even players actually playing this out really well. So I see this how the game of Uno, right? When we play, it's all about, so not Uno, sorry, Monopoly, where we know what to buy, how to buy, to just to make sure you win at the end. So these are things that actually drive people, and this is a layer, a monopoly layer that is coming on top of different games, and games are also evolving towards this. So in general, because now you have the traders and investors coming into these games, they bring in a lot more capital, right? Maybe the underlying economy will be smaller, but they exaggerate that by bringing more capital and bringing more interest in general. And I think that is going to be a next big change in the gaming industry, and really looking forward to see that evolution happening. And we are Tegro also sort of building towards that. So we have Tegro as a product, but we are also starting an open source economic framework, which is very community driven. So where I'm also contributing, I started with that, but now trying to get more people on board. So if you are an economist interested in it, feel free to contribute. The idea is to make more sustainable games, and take the full advantage of the Web3 revolution that is happening across every industry that we can think about. Yeah, so I think that's it from my side. I hope this gave you guys a very high level of how things work from an economic point of view, because these are things that not many people talk about it or don't have depth into it. But luckily, I was part of the whole cycle, so I got to learn a lot, both being in WazirX as well as being playing with games. And I see this being a next big industry to sort of drive after and build for that. So if you guys want to follow, on Twitter, just go ahead and follow me. I will be sharing a lot around economies, how to look forward to it, whether we should be having dual token, single token in a game. In fact, I believe there should be no token. So there's a lot of such debates that happen. So feel free to, ping and also ask questions, and happy to answer them everywhere. Thanks.